So we'll see or we'll move on to the important or the basic accounting concepts. Okay, in that the first one is business entity concept. Here, why do we call it business entity concept is always business is totally different from the owners, and that is why we call it business entity concept. So based on this concept, it is accounts are always being prepared on the basis of the business and not from the owner's point of view. I'll tell you a short example for this. See, when there are large business concerns running in the market, what happens is there will be real owners, that is the investors. Okay, so wherein even a layman or a general public can also buy share from that company and become the owner. All the shareholders, whoever buys even one share from a company, becomes the owner of that business concern. Okay, but the business is totally different. Why it is different is there are actual owners of the firm. Okay, so let us take Reliance. Okay, so wherein Mukesh Ambani is the owner, actual owner of the Reliance or Jio or whatever products he makes or he runs. But there are people who invests in his company's share, and they are also like owners of the business. But totally whatever happens in the business is not dependent on the owners. If a shareholder does not want to continue in the firm, he can move out of the firm. Okay, so whenever he wish to join, he can join, and whenever he wants to move out, he can move out. So business is not fully dependent only on the owners. Business, that is why we call business is totally distinct or different from the owners. Okay, and also according to this concept, if we see, only the business transactions are not recorded. They won't record any minutes of meeting, that is whatever they discuss in the meeting. All such things are not being recorded. The transactions which are like in monetary nature alone are being recorded in the accounting procedures or the accounting results or reports. Okay, so that is why we call it business entity concept. The second one is money measurement concept. Why do we call money here is whatever transactions we enter into the accounting principles or accounting statements, all these should be expressed in terms of money. Okay, so only those transactions where we have monetary terms involved only are being recorded in the accounting statements, and that is why we call it money measurement concepts. Okay, and why we do not enter the non monetary, or why we do not involve any non monetary aspects are that doesn't have any value in recording, or accounting standards does not allow the non-monetary transactions to be recorded in the accounting statements. Okay, and that's why these are not being entered. The next, there is an example also given here. If a business has 5 computers, 2 tables, and 3 chairs, the assets cannot be added to give useful information unless they are expressed in monetary terms. For example, in a business, they may have many number of computers, they may have many number of chairs, they may have many number of machineries, but we cannot simply enter that we have so many computers or so many machineries alone. Okay, instead the value of those assets are to be entered. That is what is being said here. So it has to be expressed in the monetary terms. Third one is going concern concept. So why do we call it as going concern is any business will be started by the owner keeping in mind that it has to run for a longer period. Okay, that will be the only intention of any businessman. So he always feels that the valuation of assets and liabilities, depreciation, all the outstanding expenses prepaid, everything should be entered in the at the historical cost, which means the rate or the cost which on which the product is being purchased or asset is being purchased. Okay, so if there is any increase or decrease in the value of an asset at a shorter period of time, it is totally being ignored because the business is going to be for a longer period. So we need not bother about the value increase or decrease in a shorter period. So going concern means the business will be run for a longer period. So if we have to say it once in one statement, this is it. Okay, the business will run for a longer period. The next one is cost concept. Here again, as we said, only the transactions or the accounts are being recorded at the historical cost. So any small changes in or increase or decrease will not be shown in the accounting statements. Okay, so whatever the cost we have purchased the asset, the same value will be returned in the accounting statements. So that's why it is called as cost concept. Okay, so here there are certain limitations why this cost concept is being done. Okay, that is by following the cost concept we have certain disadvantages. One is whether the price of the asset increases or decreases, the decrease or increase is not shown anywhere in the accounting statements. That itself is a biggest disadvantages. And the second one is the results of the business units, like when we try to compare the value of the assets maybe after 2 years, the actual value of the asset would have gone down. For an example, if you purchase a furniture today and if you have to value it after 2 years, the cost of that furniture is not going to be the same. It would have got decreased because of the usage or because you did not use it at all. Okay, so there are so many causes of depreciation, we call it as depreciation. There are so many causes of depreciation which are not at all shown in the accounting statements. And the last one is we talk about historical cost. Do we can we calculate, or is there any possibility for us to calculate the human resource, which means an employee would have been recruited or appointed maybe say in the year 2020, in the month of January. Okay, January 2020, he cannot be valued. We cannot value any person, right? So he is worth 1 crore, he is worth 20 crores, like that we cannot differentiate. So those, actually these people are also assets only, but those human resources are not being valued. So cost concept will not be much useful in the accounting statement, but still many concerns are using these concepts.